Hello and welcome to Pro Trader Strategies Market Commentary for Friday, November the 9th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the economic data. Friday, we got some good economic data finally. Something to talk about yesterday. FOMC did leave interest rates unchanged. Haven't heard a whole lot of rhetoric coming out about that yet, but let's talk about today's data. We got French industrial production coming in at a negative 1.8%, expected to be a negative 0.3%, and they revised last month's number down from 0.3% to 0.2%. Pretty bad headline number though. GDP month over month for Great Britain came in at unchanged, expected to increase by 0.1%. Manufacturing production month over month came in at 0.2%, expected to be 0.1%. So finally, we got a number that's actually better than expected. And they revised last month's number up from negative 0.2% to negative 0.1%. So a nice revision there, making the headline number even a little bit better. Preliminary GDP out of Great Britain came in at 0.6%, in line with expectations. Preliminary business business investment came in at a negative 1.2%. This is for Great Britain, expected to be 0.2%. So a lot worse than expected there on business investment. And they revised last month's number down dramatically from a positive 0.5% to a negative 0.7%. So just terrible number out of that. Then Great Britain's construction output came in at better than expected at 1.7%, expected to be 0.2%, and last month's number revised up nicely from negative 0.7% to negative 0.3%, so a nice revision to the upside. And trade good balance came in at negative 9 billion. I don't care about that so much. I don't really look at that. Great Britain industrial production came in at unchanged, expected to be a negative 0.1%, so better than expected there. But then they revised last month's number down from that positive 0.2% to unchanged. So a wash at best for the industrial production out of Great Britain. Back here in the United States, we got PPI month over month coming in at 0.6%. PPI, remember, is producer price index. It's what the producers have to pay for the goods. That usually is something that they will try to offset with the consumer in the CPI. And from what I've been seeing, this PPI number is indicating about a 3% CPI. So we'll have to see if that jacks up a little bit if they're able to pass on those higher costs to the consumer. Core PPI month over month came in at 0.5%, expected to be 0.2%. And we've got a Fed governor speaking later on today. University of Michigan consumer sentiment came in at 98.3, expected to be 98, so slightly higher than expected, but unchanged for the most part, or in line with expectations. Final wholesale inventories in the United States came in at 0.4%, so that's an increase. Inventories rising is not necessarily a good thing unless we expect them to have future spikes in sales, and that's what they're getting ready for, which is what I would believe that this number is indicating heading into a holiday season. Yes, I think that they are just building inventories ahead of that. And University of Michigan inflation expectations in line with expectations at 2.8%. All right, let's talk about the markets now that we've gotten all that out of the way. Crude oil continues to slide. Some people are calling for $40 crude oil. I think that this is about where we have gotten overextended to the downside. I've talked about this. Having said that, I'm not taking the risk with my USO trade, so I'll talk about that here in a minute. But this downslide is a little bit overdone as far as I'm concerned. I don't like the market trajectory on it, so that's why I pulled my trade in USO. I just think it's overdone, but the markets can push further than the boundaries we want them to test. So that's why I'm a little bit concerned about crude oil. Gold futures coming off quite a bit today, down $17. This market is kind of like Bitcoin. It's basically all over the market, or all over the place right now. There's no flight to safety in gold today, even though we're seeing the equities down. Now, to me, that is a positive sign for equities to the upside, despite the fact that we're seeing this big pullback. But gold down on the day. Sorry about that. Somebody must be at the door with the dogs, or trucks out front. Sorry. All right, bonds moving higher today by almost a full percentage point, as I think that people are going to start taking out the possibility of the rate hikes going forward. So I think bonds are going to move to the upside. All right, the VIX is moving higher with the equities coming off. We would expect that. Now, I looked at this yesterday and said that I think that this pause was good after the big rally. Today, we're getting a bit of a pullback. I don't think that it is a major sign of concern for the upside if you're bullish, which I am. I think it may come down and test this. It may try to cover this gap, but as bullish as this felt the last couple of days, I don't really see this as a negative. I think it's more just profit taking and allowing us to release more to the upside. Now, the NASDAQ looks a little bit worse than the Dow does, as we have like a tweezer top here. That's a major support resistance area acting as resistance right now, and we came back down to the point of control. Now, I'm long-term bullish. I'm not worried about the downside, like breaking these lows again. I think that the economic data is supporting a bullish equity, so I'm not too concerned about this necessarily on this pullback. I'm long deltas, so I'm not too worried about it. And then we look at the E-mini S&P's chart. Looks almost the same as the NASDAQ. Looks like it's a confirmation of a top. I think this is a fake out. To be quite honest, I think we are going to be able to rally. Some people will be talking about this tweezer top here. Very difficult to break through, and that's what we've seen. But I think we might come down, test this Fibonacci, maybe even the point of control before we zoom to the upside. But I think long term, I'm overall bullish the equities with the way that the economic data is coming out. And this is the overnight trade. As you can see, got short. I think it's really more profit taking from the longs, and it's continued to bleed into the day session. No attempt to really take out the highs seen in the overnight session, which is not always a great sign, but I think that, or not a very bullish sign, I should say, but I think that to the upside is the risk in the equities. Let's talk about some trades that I've done. Disney, I put this out on Twitter yesterday. It was an earnings trade. I think I even talked about it in the daily market comment. Actually, no, I talked about it in the webinar yesterday about using this for an earnings trade. And I went in, did the November, sold the 111 puts in there for 50 some cents. It was 52 cents, and I bought them back this morning for 20 cents. So a nice profit there. Market direction, obviously, helping, and or obviously the catalyst for the biggest part. And we got volatility coming out. That was a double positive for me in that trade. So Disney I took to the upside, and it worked out. USO, this is that trade that when I took it off, it was not looking very good at all. And USO took it off for a small loss. I had on the December 12 and a half puts in there. I sold for like 35 cents, bought them back for 50 cents this morning. Just with the way the market was acting this morning, I didn't like that. Came down, tested this point of control. I may very well put this on Monday if we start getting confirmation to the upside, but I was a little early. That's why I had a quick ripcord on that one. And then finally, we've got Nike here, where I had on the December 65 puts in there. And I played that to the upside. I think I did that on like October 31st, so it was right here, down at the bottom. Volatility really didn't come out on this trade for me, but obviously the directionality was what we were looking for here in Nike. So that worked out to the upside. The Nike I sold for 52 cents, bought back for 20 cents, and I sold the D65 puts in there. So that worked out back in November. So that's what we were looking for that trade. And that's about it. That's all I've done with those three trades. The Disney got out of my USO that I sold for 35 cents, bought them back for 50 cents. The Nike sold for the Nike I sold for 52 cents and bought them back for 20 cents. So Nike, USO, pretty much a wash on the day. Nice trade on Disney for the upside. And that's it. Hope you guys all have a great weekend. I appreciate it all. Give me a thumbs up, thumbs down, like or dislike on this video. If you give me a thumbs down, though, let me know what it is that is annoying you so I can try and fix it, all right? So that's about it. If you can't take that, take it easy. Have a great weekend.